The coveted paper Bitcoin attack just accelerated with this move by BlackRock. They are now increasing their Bitcoin products because they're seeing the absolute demand from everybody and not just traditional Wall Street execs for Bitcoin. And on top of it, we just had potentially one of the biggest backflips in all of Bitcoin, where we've had one of the mega bears just bend the knee to Bitcoin. We're going to go over all of this with my good friend Jason from Meanwhile here in a second. But first, let's hit on what this announcement from BlackRock just was, where they are announcing a monthly yield product on top of their iBit Bitcoin ETF. Now, what I think is unique about this is that they've seen just how massive this Bitcoin market is in general. I mean, the fastest growing Bitcoin or the fastest growing ETF in history. And now they're trying to double and triple and quadruple down on it, as we originally saw Larry Fink being one of the biggest Bitcoin bears on the planet. So, Jason, I'm curious, what do you think of all of this and BlackRock really getting all in Bitcoin?
This BlackRock filing shows Bitcoin is now a foundation for yield products. It's not just an alternative. It's basically Wall Street financializing Bitcoin, which is a validation of Bitcoin's role in global markets. Then the question is, well, where's the yield coming from? It's like that old meme of like the duck, but like, where does the yield come from? Well, I think they're selling upside. I think they're selling covered calls. So what it says to me is that you're basically going to be selling the most asymmetric upside asset in history to get some yield. So you're giving up some upside to have some yield for those who are scared of volatility and downside. I get it, but the question is whether you want the Bitcoin to be your long-term hodl asset or whether you want some like a quick buck in the short term via the form of yield. And so depends on who you are. If you're young and this is in your IRA, like, what are you doing getting like 3% yield a month in this? Like, you can't touch your IRA till you're 59 and a half. But if you're older and you want something more steady, then perhaps it makes sense. But either way, every layer of financialization makes Bitcoin adoption deeper and stickier.
Yeah, so all of these Bitcoin yield products are essentially slowly coming to the market. But you were right; they're essentially selling those covered calls. So you're missing out on a lot of the potential upside of Bitcoin. But the unique thing to me is that it's just giving more products and the financialization of Bitcoin. Now, I think that they're looking at a lot of what Strategy has been doing. Obviously, they've had their convertible preferred stock options, offering some dividends and other things like that. But BlackRock doing it always gives me a little, I guess, iffiness, because BlackRock is not custodying their Bitcoin. And that's always been the worry with everybody related to the TradFi world, is that, hey, is Coinbase, who's their custodian, potentially issuing that paper Bitcoin to BlackRock and other ETFs. Now, BlackRock's ETF, they've diversified. They've got a few other holders, but Fidelity, their only other, like their biggest competitor, is the only one that just does the full custody on their own. So with these Bitcoin yield products coming onto the market, I know you said essentially it's the Bitcoin, or the Bitcoinization of finance. Now, what are some of the potential risks that you see with things like this coming to the market, and some of the potential missing out that you can get from opposed to just holding that spot Bitcoin spot Bitcoin?
Good question. I would say that some of the risks have to do with capped upside. So selling calls means you give up gains if Bitcoin surges. So basically, you're renting out the best part of Bitcoin. There's some volatility dependence. Your downside is still exposed because covered calls don't protect you in a crash. You're still long in Bitcoin. Obviously, there's going to be execution and fees, transaction costs, hedging, management fees. They eat into the yield. And yeah, other than that, I would say that the custody risk is not really there, from my perspective. I don't think that we can be concerned with Coinbase, Anchorage, or Fidelity custody. They're the three stalwarts in America and therefore on the planet in terms of the most legitimate, regulated, licensed, above board, adults in the room custodians that if anything major happens to any of them, then the whole market is in serious, serious problems and trouble. And I discount that anything major is going to happen to those three. This is not FTX or BlockFi or any of the, previous players or Prime Trust even, who was an unknown QC qualified custodian back in the day that disappeared and went under due to mismanagement. These are highly scrutinized. Some of them are publicly traded companies that are custodians. And I wouldn't worry about custody risk. If you're worried about custody risk, I think you're kind of missing the big picture
here. Yeah, I definitely think that there is, excuse me, coffee went down the wrong hole. Oh man, halfway dying over here, Jason. Maybe I need, meanwhile, we'll get to that in a minute.
Just take it over?
Yeah, but anyway, when we're seeing gold and Bitcoin products now moving into yield, and you see the way that gold is reacting in the current market structure, gold recently hitting all-time highs, and everybody's seemingly worried about inflation here. What does it tell you about how people are viewing Bitcoin now with all of these inflation risks? Obviously, we've got the potential of interest rate cuts coming on and a lot of issues here, just from the traditional financial system starting to come to roost. And it seems like people are looking for more of that inflation hedge, so to speak, and Bitcoin and gold are starting to do well. Of course, we've got a little bit of a down day here for Bitcoin, but what do you think of, just that aspect?
Inflation is this persistent beast that isn't going to go away anytime soon. It in my opinion, it's largely a result of the 2008 financial crisis and the 2020 pandemic response by global central banks of just printing money, printing massive amounts of paper money, devaluing the currency of each country. And look at in the US, for example, and you see the price of groceries going up drastically in the grocery store. Basically, everything's getting more expensive, rent, housing prices, and yet wages are not going up commensurate with the rest of the goods. And so there's this, awful situation of the devaluing of the dollar. Now, I don't think it's new or accelerating or anything like that. Gold is this antiquated, yet it works really well, inflation hedge or flight to quality asset that central banks rely on to back their ability to print money. And it's been performing really well as people look for alternative investments outside of just equities to park money. And Bitcoin, gold, equities, with rate cuts just beginning and going to continue, the fixed income market, that old 60-40 portfolio is getting shifted much lower. There's going to be less appetite for fixed income yields, given that the yields are coming down. And it's a question of where we're going and on what time horizon. I think Bitcoin is going to be the drastic outperformer over a long time horizon. Equities perform well when rates are lower and in a easing cycle, when the Fed is cutting rates. Gold technically shouldn't be performing so well, at least historically speaking, but history is not an indicator of the future. But generally, when rates are going lower and risk assets are going higher, well, gold is not a risk asset. But the fact that it's up and it's having a great year just shows you that investors are looking for places to park capital.
Yeah, it's interesting because gold is actually outperforming the S&P 500, and I think this is one of the first times we've seen that, at least in a very long time. And then we also have, you mentioned the fixed income market, how Bitcoin's essentially starting to take over about that. Now, I think the two of the biggest markets that we're seeing Bitcoins really start to take in is not only the fixed income market, but that global bond market with all of these different financialization products, right? So mean, the global bond market, you mentioned the 60/40 portfolio. That's $300 trillion worth of a market right there, and then $145 trillion fixed income market. And Bitcoin is starting to crack its way into all of those. And so I think, over time, we're starting to see all these big players essentially bend the knee and really start to see the value in taking over some of these markets that are just essentially archaic. Now, we also are seeing the vanguards of the world actually starting to move into more of a, let's call it like a Bitcoin friendly type of space, because now they're the second largest asset manager in the world. They're preparing to allow access to the crypto ETFs on their brokerage platform, which they haven't before. Now, obviously, this is majorly significant, not only with just how big Vanguard is, but how anti-Bitcoin they've been for so long. So what do you think that this says about the overall market here, and just this transformation from Vanguard now having to open the gates to their employees, or not, excuse me, employees, but their clients for Bitcoin?
It says a lot. I have a lot of thoughts on this.
All
First
right, let's
is,
hear 'em.
okay, boomer, finally, what took you so long? Are you that thick that you really thought Bitcoin was going to zero? For almost 2 years, BlackRock filed for the ETF January of 2024. It's now almost October of 2025, and you're just getting ready to launch ETFs. You're the second largest asset manager behind BlackRock. Why did you not figure out to just let your clients buy this regulated licensed ETF? There's 11 of them, I think, in Bitcoin, others in ETH. Let them trade their own capital in and out of these regulated security structures. They're not touching spot Bitcoin if that's what you're scared of. It's an ETF. It really frustrated me that for so long they were so anti-crypto. And for them to finally come around and just give in, it just shows how weak their leadership is. And I have a very polarizing view on Vanguard, just because that it's, you have your money parked there and they're telling you how you can and can't spend your money. And to me, that's wrong. And that's one of the core tenets of crypto in general, is be your own bank, is choose what you want to do with your own assets and capital that you work so hard to earn over the course of your life. Or you're so smart to make the right investments that you earn money, and you should be able to be in control of that money. So shame on them for waiting so long and taking this left-wing anti-crypto view that clearly is so antiquated and out of date, that they're finally getting the picture. The regulatory environment is supportive of crypto. There's so many reasons to be supportive of crypto, or at least not get in the way. Two, is this the top? I mean, they're finally letting in their trillions of dollars of clients' assets into crypto. It's like the shoe shiner telling JP Morgan which stocks he should and shouldn't be buying before the 29 crash, the Great Depression. I mean, if you look at the history of the 4-year Bitcoin bull bear market cycle that centers around the halvings, September, October, this part of 2025 is technically when the peak is in, or was in, or is near to be in. If history is any indicator of the future. Now, history doesn't repeat itself, but it often rhymes. And if the 4-year cycle is still alive, despite the fact that we have this totally bullish administration that will be in power until 2028, that is embracing crypto and supporting crypto, and there's all these fundamental tailwinds to support crypto, you can always cherry pick these certain fundamental events and technical events that could call for a top. I'm a Bitcoin bull. I'm a crypto bull. I'm a Bitcoin maxi. I want to believe that the 4-year cycle is broken just due to all these fundamental tailwinds and the fact that Bitcoin is still very under adopted globally, in my opinion. But doesn't mean we can't see 70K again, for several months. And listen, I'm buying at 70K and buying at 80K. I'm looking for bargain basement discounts. But yeah, I don't think we'll see like an 80 to 90% drawdown in this cycle. I just find it so hard to believe. I think there's so much money waiting on the sidelines to scoop in discount prices. But when there's certain fundamental events and like this, like hey, the guys, are we late to the party? It's like, yeah, the we're out of alcohol. Like everyone's about to go home. Like, what are you doing here? Like we're on to the next thing. Like everyone needs to go to sleep for a few months. What are you doing, Vanguard? Like why September 26th, 2025 did you make that announcement? I don't know. It's just that's my general feedback on this.
Yeah, and it's funny, right? Because I always point this out that Vanguard is the biggest investor in MicroStrategy stock.
Why do you think that is? Because they can't buy Bitcoin, they can't buy the ETF. They can buy a single name stock that's a proxy for Bitcoin. So they're going to all load up into MSTR. That is the indicator in and of itself to prove to them that their clientele are so hungry for Bitcoin that they're just piling into MSTR. And now, are they going to sell MSTR to buy the Bitcoin ETF? And MSTR is going to have a huge correction, and that could lead to a bigger, broader market correction? Maybe.
Yeah, maybe. But I mean, I do think that Vanguard coming in, and on top of it, we also see, US lawmakers urging the SEC to act on Trump's, crypto retirement plan where he's going to unlock the 401ks. I think it's just a matter of time. I mean, we have so much money and desire to get products like this. I mean, it's just like you said, right? I mean, you look at the clientele who's buying Bitcoin right now, right? I mean, we've got BlackRock, all of these big giant institutions, treasury companies coming on. The amount of demand here is just absolutely insane, and it's taking off to something that we've never seen before. And everybody always says, "Oh, you know what? Once Bitcoin gets bigger, the market cap is going to be harder to move." I don't think so, because now that Bitcoin's getting bigger, there just means the bigger players are now interested in wanting to come in. And these pools of capital, they're not just from the plebs anymore. This is from everybody. And, 401ks are massive. We see these treasury companies coming on. So how big do you think it is for these retirement plans to now start to really get Bitcoin, or availability to get Bitcoin into their 401ks, IRAs, and etc.?
I think Bitcoin is a great long-term HODL asset that it makes all the sense in the world to have it from a retirement perspective. But you need to figure out, how can you hold Bitcoin for long enough time period so that it can be there for you at retirement age, or in life insurance, so that it can be there for your family when you pass it to your next generation. If Bitcoin is in self-custody and you lose your passwords, you're screwed. If Bitcoin is in self-custody and you have a family but only you know how to access your wallet, because it's very complicated with self-custody hardware or software devices, passwords, private keys, Google Authenticator, YubiKeys, ledgers, safety deposit boxes, and you tragically die tomorrow, get hit by a bus, and your family doesn't know how to access your crypto, well, then your Bitcoin dies with you. How do you make sure that it's there for decades or generations, or for your loved ones or for your children one day? How does it outlive you with 100% certainty? That's a question that actually my company has solved, that I'd love to talk to you about. I think this is a good segue, but
Yeah.
it's important that people view the right assets like Bitcoin as long-term assets, and then figure out the smartest way to hold them for the long term and pass them to your loved ones when you die, or when it's right one day.
Yeah, so let's get into it. With Meanwhile, right? It's Bitcoin life insurance. So I think that this is a unique product. But I don't know if a lot of Americans really like look into life insurance as an alternative. But I mean, it is kind of like a more traditional financial tool. To now, you guys are kind of flipping that whole industry on its head. So tell me a little bit about that, and how this whole thing works.
Yeah. So Meanwhile is a Bitcoin denominated life insurance carrier. We're based in Bermuda. We're backed by Northwestern Mutual, Fulger, Framework, bunch of big names. We're actually about to we've just closed our latest fundraising fundraise, which we're going to announce in a week or so. Some more big names. So we're a venture funded Bermuda based life insurance carrier that operates completely on the Bitcoin standard. Bitcoin is literally our currency. We don't look at dollars anymore. Dollars getting inflated away. The purchasing power of the dollar is declining. The whole concept of using whole life insurance to borrow tax-free dollars is kind of diminishing and getting broken because the dollars you're borrowing in the future are worth a lot less than they were today. And so while you're saving on taxes, you're getting eaten away by inflation, this like secret tax or this subtle tax that is not published and you know it exists, but it's hard to quantify. So when you do everything that life insurance promises, which is tax-free growth and tax-free policy loans and whole life insurance, and the ability to pass on your family more assets than you paid in, to do it all in Bitcoin is totally revolutionary. So we were founded in 2022. We've been live, the Bermuda Monetary Authority is our regulator where we have all of our licenses. They kept us in their sandbox for over a year until they realized that we were legitimate, above board, earned our licenses, and we're ready to launch globally. And we've been issuing policies since late 2023, I believe. And the way it works is you pay your premium in Bitcoin, your death benefits paid out in Bitcoin, and you can get policy loans because this is whole life insurance, not term, in Bitcoin. But if the price of Bitcoin's up, then you're getting a new stepped up cost basis. And I'll explain how that works. So the core problems that we solve are threefold. One is you get yield on your Bitcoin. Life insurance, we grow the pot. Every policyholder gets a 2% annual compounded growth rate in Bitcoin denominated terms. So for example, a 35-year-old healthy non-smoking male who wants to use 10 Bitcoin as premium, they get around 18 Bitcoin in death benefit. 10 becomes 18 over time because it's growing at 2% a year compounded over the course of that person's life. And the way that it grows is you pay your premiums over 10 years. So for example, this 10 Bitcoin in premium is paid in equal annual installments, in this case, 1 Bitcoin at a time each year for 10 years, regardless of the price of Bitcoin. We don't look at the dollar price of Bitcoin or any fiat conversion of Bitcoin. We think in Bitcoin. So whatever you decide your premium is going to be, if it's 10, if it's 5, you divide it by 10 and you pay that over 10 years in equal annual installments, regardless of price. And then you're done for life, hence whole life. In the future, let's say Bitcoin goes to $1 million one day. Well, you have two options if you have a policy with us. Option one is sell Bitcoin at $1 million if you want some cash, but you're going to pay a very big capital gains tax relative to your cost basis. Option two is borrow against your policy because this is whole life. And with whole life insurance, there's a policy loan and an investment component. It's not term life where if you die, your family gets paid. And if you outlive the length of the term policy, then nothing happens. It lasts your whole life. There's an investment component, hence the yield, and the ability to borrow assets tax-free. And so Bitcoin goes to $1 million. You can borrow up to 90% of your surrender value. So it's in essence a 90% LTV loan. And you go log on to your portal, your Meanwhile portal, since you have an account, and you see the maximum amount you're allowed to borrow, 90% of the surrender value. You decide, I'm going to borrow 2 Bitcoin. Let's say that's within the threshold. Well, you're going to give us a wallet address that you'd like us to send the 2 Bitcoin to. And we're going to screen that wallet, make sure it's not going to North Korea. And then we're going to send you 2 Bitcoin. And then Meanwhile is done because you're borrowing Bitcoin. You're not borrowing dollars. You're not borrowing fiat. You're not borrowing dollars against Bitcoin. Everything's in Bitcoin. So if you're borrowing 2 Bitcoin, your death benefit's 18 Bitcoin. Well, then your new death benefit is 16. Hence, you don't have to repay that 2 Bitcoin. It has a 3% interest rate on the borrow. So it's a low interest rate loan, and you can compare that to anywhere else that you can borrow Bitcoin or borrow against Bitcoin. And then what do you do with that Bitcoin now that you borrowed it? Well, presumably you want cash. So you're going to go to an exchange and you're going to say to the exchange, hey, I got 2 Bitcoin. I want to sell it $1 million a coin. And they're going to say, okay, but hold on. Where did this Bitcoin come from and what's the cost basis? Well, this Bitcoin, you'll have a loan document. It came from my regulated life insurance policy at Meanwhile. And the cost basis is established on the day you originate the loan, in this case, $1 million a coin. Well, your Bitcoin originally that you bought years ago might have been $1,000 or $50,000 or $100,000 a coin. You're not using that Bitcoin when you get a policy loan. You're getting new, different Bitcoin at a new stepped up cost basis, in this case, $1 million a coin. So you show that to your exchange, you sell at exactly that price, $1 million, your cost basis equals your sale price. There's no difference. Hence, there's no taxable liability. You pay 0 in taxes. There's no 1099 that year. You withdraw the 2 Bitcoin, $1 million a coin, 2 million cash into your account, and it's yours. You never have to repay it. Like I said earlier, your death benefit goes from 18 to 16. It just nets down. And if Bitcoin crashes in the future in the next bear market, nothing happens because you're borrowing Bitcoin against Bitcoin collateral. There's no margin call risk. There's no top up or liquidation event or requirements that would ever happen because you're really borrowing from yourself or your loved ones, your beneficiaries. You're not borrowing from a life insurance. You're not borrowing from a lending desk. You're not borrowing dollars against Bitcoin. And if the dollar Bitcoin price changes, something happens. None of that. Think in Bitcoin. Everything we do is in Bitcoin. Bitcoin is our currency. The last thing I'll say as to why this is so important and what problems it solves is the fact that when you do pass, when whoever's the insured dies, then their beneficiaries, their loved ones, their family, whoever they leave in as beneficiaries, they get Bitcoin. And they get Bitcoin at a new stepped up cost basis. We use Anchorage as our custodian. And when there's a claim, when there's a death, the family, the beneficiaries file a claim with Meanwhile. And Meanwhile and Anchorage together reach out to the client, the beneficiaries, and ask them what they want. In a concierge white glove way, we understand that most families won't be as crypto tech savvy as the owner who had the policy in the first place. And they might not know what the hell to do with Bitcoin. What do you do with the wallet? What do you do with, I just want to sell it. We'll help them sell it in Anchorage. Maybe they want to split the Bitcoin into a few different wallets. We'll help them split it into different wallets. We will walk them through in a handheld, white glove way, whatever they want to make it as easy and seamless as possible. So that way your Bitcoin doesn't die with you, that your family is left with more Bitcoin than you had originally pledged in. Like I said, 10 Bitcoin in premium for a 35-year-old male, about 18 Bitcoin in death benefit with no loans. Your family gets 18 Bitcoin at a new cost basis the day the death or the day that the claim is filed. So in that case, if you die when Bitcoin's at 10 million bucks, then your family has Bitcoin at $10 million a coin. And if they sell it at 10 million a coin, that's tax-free as well. So it's an amazing, amazing, powerful tool where you might not, no one ever wakes up really and says, oh, I want life insurance today. But you might wake up and say, what the hell do I do with my Bitcoin so that it outlives me? And this is the answer. It happens to take the form of life insurance.
Now, last time you came on, there was a couple questions in the comments about where the yield comes from. So if you want to dive in a little bit more about that, let's hear it.
Where's the yield come from?
Exactly. You said it earlier too. So you set yourself up for this one.
Oh, we have an awesome program of where we get yield. We're a life insurance company. As such, we are extremely conservative, extremely risk averse. We have to be around for centuries, at least generations. And the goal is to be around for hundreds of years, to be one of the biggest life insurance companies on the planet. How do we do that? Well, by not taking any unnecessary risk. Where does the yield come from? We work predominantly with the Bitcoin miner community. Miners are in a unique situation where they are earning Bitcoin. But especially the miners that have been earning Bitcoin for a long time, mining Bitcoin for a long time, they might have some very low cost basis Bitcoin on their balance sheet. And what can they do with that today if they were mining Bitcoin at $100 or $1,000? Well, if they sell it, because they all have CapEx and OpEx needs, if they sell it They, just like us, have to pay very large taxes, capital gains taxes, the difference between the sell price and the price at which they mined it on the day they mined it. So you mine Bitcoin at $100, you have thousands of Bitcoin on your balance sheet from like that era, 2013. You're not going to sell it. You're not going to pay 20 to 30% cap gains tax on that. You're going to sell Bitcoin that you mined closer to today, like in the last couple weeks, or you're going to get loans against your ASICs, against your facility, against your machines dollar loans. Because when it comes time for CapEx and OpEx, it's in fiat, to pay the electric companies, to pay rent. You have a lot of dollar-based expenses or fiat-based expenses. So the low-cost basis Bitcoin, we call it, or I like to call it captive low-cost basis Bitcoin, is just sitting there. They're like Bitcoin treasury companies, the original Bitcoin treasury companies. And they didn't think they could ever do anything with that Bitcoin because they don't want to pay taxes on it. Until Meanwhile came around. Being a life insurance company, we're in a very unique position where our assets, our liabilities are very long dated. I mean, we have 20-year-olds who have policies. They're not going to die for 60, 70, 80 years. And hence we are duration seeking. And so we're willing to do long-term loans. And the loans that we've structured with these miners are essentially, we call them, it's a repurchase agreement. We call it a Bitcoin parity repo loan, where essentially the miner lends us 100 Bitcoin, let's say, and we'll lend them back 100 Bitcoin, and they'll pay us 3% upfront. Why would they do that? Well, the 100 Bitcoin they're lending us is captive low-cost basis Bitcoin that they can't sell or do anything with. That's just sitting there, that they never even thought that they could do anything with for tax purposes. The 100 Bitcoin that we send them back, well, that assumes today's cost basis. And they pay us 3%. So mechanically, it actually works where they send us 100 Bitcoin, we send them 97 Bitcoin back. And that 97 Bitcoin, they can instantly sell it for basically no tax liability because it assumes today's cost basis. And it's a 1-year term. And they can do anything with that Bitcoin for a year. After a year, they can pay back the loan, 97 Bitcoin, or they can roll it over to the next year by paying another 3%, another 3 Bitcoin in this case. And they can keep doing that, rolling it over, rolling it over, rolling it over. And what do we accomplish here? Well, what we accomplished is counterparty risk-free, credit risk-free, 3%. That's actually 3.1% Bitcoin denominated yield. Why is it credit risk-free and counterparty risk-free? Well, we have all the collateral. It's a fully collateralized loan. The miner gives us 100, we give them 97 back. If they disappear, go belly up tomorrow, well, we don't care because we have all 100 Bitcoin of theirs. And so because they're paying the yield up front, they give us 100, we give them 97 back. So we have 3.1% Bitcoin denominated yield on an annual basis. We give 2% to every policyholder. So everyone who has a policy with us, their policy is growing 2% a year. And we as an insurance company capture the spread on top of that 2%, in this case, 1.1% or 110 basis points. That's how we make money as a life insurance company. So we're not lending out Bitcoin to shitty counterparties. We're not taking any unnecessary risk. We're not selling covered calls to get yield and sacrificing the asymmetric upside of this unique, groundbreaking asset. We're doing credit risk-free 3.1%, and it's a pretty smooth operation we got going.
Yeah, 100%. And the man All Nighter Hider put the referral link down in the chat as well. So, I mean, it seems like it's a great product, and it's a huge thing that a lot of people are, demanding. All these financialization of Bitcoin is basically or Bitcoinization of finance is what we've been kind of talking about this entire time. So it's absolutely massive. I think the upside that is definitely there. So what is some of the common questions that you get that you think we might have missed in this discussion here?
The other question is like, this sounds amazing. It almost sounds too good to be true. Like, what's the catch? Well, there's no catch, and it's not too good to be true. This is life insurance. This is how life insurance works. We are a plain vanilla life insurance company with a plain vanilla 10-pay, limited pay, non-participating or non-mutual whole life insurance product. The only difference is that our currency for our insurance company is Bitcoin, not dollars. If you replace everything we do in dollars, you'll see this type of product exists in the exact form it exists at every other life insurance company. It's a 10 pay. Well, so what's the catch? There's no catch. I mean, the only catch, I guess you could say, is time. Life insurance is a long-term asset. You're not going to be able to pay 20 Bitcoin in premium up front and then borrow against 20 Bitcoin 90%. You can't do that all up front. It takes time. Surrender values grow slowly over time, 2% per year, based on the premiums paid in and the 2% growth rate. So it's a long-term asset. But if you have Bitcoin in self-custody, then this is a serious consideration for you, because think about what happens if, God forbid, you get hit by a bus tomorrow and you die. Well, does someone you love that you want this Bitcoin to go to, are they going to be able to access it tax-free, seamlessly, with 100% guarantee? Or might your Bitcoin die with you? Or might it go into probate if it's accessible and estate taxes are going to take 40% of it? What are the worst case scenarios for anyone with Bitcoin in self-custody? This gets rid of all of that. Your Bitcoin's safely at Anchorage. Your family doesn't need to know how to use a wallet. They don't need to have a treasure map of all your information on how to find and access your wallet and move it and where to set up accounts and how to sell it and what the tax bases are, all that. It's really, really simple. And we really try to make it as easy as possible for everyone. It's all online. We use AI, just like all the latest companies do, to automate as much as possible and streamline as much as possible to keep our team lean, to allow us to grow as quickly as possible globally, without having to have a 1,000 or 10,000 person, employee count at an insurance company, but to do what 1,000 people can do with 100 people, just because we're automating as much as possible. So we're a very tech forward product. And when you get a policy with us, everything's online. And so you can, from signing up to having an active policy, is days, like 5 days. Whereas with traditional life insurance, it's a month, maybe at best, to sign up to actually having a policy. So we really try to make everything as easy as possible.
Sounds good to me. It sounds like, you guys are absolutely crushing it. I love the product as well. So why don't you tell people, outside of the referral link, if you want to sign up, where they can find out more about you, Jason, and more about Meanwhile?
Yeah, you go to our website, or you can email me, jason@meanwhile.bm. BM is for Bermuda. Happy to talk with anyone. Happy to answer more questions in detail offline. I have my own policy. A lot of the employees at our company have their own policies, because it's such a no-brainer for those who have Bitcoin, that we think it's, we're just trying to spread the word and get the word out there that Meanwhile exists, that Bitcoin life insurance, the only company on the planet that does it, exists, and you should know more about it. And talk to Brandon, talk to me, go to our website. You can reach out. There's a bunch of different ways to find us, and we are happy to talk to anyone and everyone who's interested in learning more, who has Bitcoin or is considering buying Bitcoin. Because if you don't have Bitcoin yet, and you're saying it's time to start accumulating Bitcoin or allocating from traditional capital markets asset classes into Bitcoin, then this is the place to put your Bitcoin for the long term. I mean, you get tax-free growth and tax-free monetization and yield. Where else can you get that?
Amen to that. I don't think anywhere. So be sure to check out Meanwhile, check out Jason, shoot him an email. And Jason, thanks so much for joining. Make sure you guys are hitting that like and hitting that subscribe button, telling more people about Meanwhile. Jason, thanks so much, man.
All right. Good to be here.